Only people who get it, get it. Consumers' rights are protected by federal and state laws and regulations, covering many services offered by financial institutions. The following briefly describes federal consumer and banking regulations that impact day-to-day policies and procedures of banks. FRB Regulation A, Extensions of Credit by Federal Reserve Banks. Governs borrowing by depository institutions at the Federal Reserve discount window. CFPB Regulation B, Equal Credit Opportunity Act. Prohibits discrimination against an applicant for credit because of age, sex, marital status, religion, race, color, national origin, the receipt of public assistance or the exercise of any right under the Consumer Protection Act. Requires adverse action notice on credit denials. Notice of right to receive copy of appraisal on certain transactions. Cannot assume delivery of joint financial statement constitutes application for joint credit. CFPB Regulation C, Home Mortgage Disclosure Act. Requires certain lending institutions to report annually on their origination and purchases of home purchase and home improvement loans as well as applications for such loans. The type of loan, location of the property, ethnicity, race or national origin, sex and income of the applicant is reported, as well as lien status, HOEPA status and rate spread. The disclosure statements are made available to the public at the institutions and at central depositories located in each metropolitan statistical area, MSA. FRB Regulation D, Reserve Requirements of Depository Institutions. Imposes certain requirements relating to transaction, savings and time deposit accounts. Imposes reserve requirements on depository institutions. CFPB Regulation D, Alternative Mortgage Parity Act. Consistent with the Alternative Mortgage Transaction Parity Act, the Truth in Lending Act, and the Dodd-Frank Wall Street Reform and Consumer Protection Act. The purpose of this regulation is to balance access to responsible credit and enhanced parity between state and federal housing creditors regarding the making, purchase, and enforcement of alternative mortgage transactions with consumer protection and the interests of the states in regulating mortgage transactions. CFPB Regulation E, Electronic Fund Transfers. Provides consumer protection for all transactions using a debit card or electronic means to debit or credit an account. It also limits a consumer's liability for unauthorized electronic fund transfers. Prohibits compulsory use of an electronic fund transfer as a condition for granting credit. FRB Regulation F, Limitations on interbank liabilities. Prescribes standards to limit the risks posed by obligations of insured depository institutions to other depository institutions. CFPB Regulation F, Fair Debt Collection Practices Act. Establishes procedures and criteria whereby states may apply to the Bureau for exemption of a class of debt collection practices within the applying state from the provisions of the Fair Debt Collection Practices Act. The Act, as provided in Section 817 of the Act, 15 U.S.C. 16920. FRB Regulation G, Disclosure and Reporting of CRA-related agreements. Implements provisions of the Gramm-Leach-Bliley Act that require reporting and public disclosure of written agreements between 1. Insured depository institutions or their affiliates and 2. Non-governmental entities or persons, made in connection with fulfillment of Community Reinvestment Act requirements. CFPB Regulation G, Secure and Fair Enforcement for Mortgage Licensing Act of 2008, SAFE Act. Federal registration of residential mortgage loan originators requires federal registration of mortgage loan originators employed by covered financial institutions. It provides that the objectives of this registration include aggregating and improving the flow of information to and between regulators. It provides increased accountability and tracking of mortgage loan originators, enhancing consumer protections, supporting anti-fraud measures. It provides consumers with easily accessible information at no charge regarding the employment history of, and publicly adjudicated disciplinary and enforcement actions against, mortgage loan originators. FRB Regulation H, Membership of State Banking Institutions in the Federal Reserve System. Defines the requirements for membership of state-chartered banks in the Federal Reserve System. Sets limitations on certain investments and requirements for certain types of loans. It describes rules pertaining to securities-related activities. establishes the minimum ratios of capital to assets that banks must maintain and procedures for prompt corrective action when banks are not adequately capitalized, prescribes real estate lending and appraisal standards. It also sets out requirements concerning bank security procedures, suspicious activity reports, and compliance with the Bank Secrecy Act, and establishes rules governing banks' ownership or control of financial subsidiaries. Also includes rules for consumer protections for bank sales of insurance products and guidelines for establishing standards for security of customer information. CFPB Regulation H, Secure and Fair Enforcement for Mortgage Licensing Act of 2008, SAFE Act, State Compliance and Bureau Registration System applies to state-licensed loan originators employed outside of covered financial institutions as defined in CFPB Regulation G. The purpose of this part is to enhance consumer protection and reduce fraud by directing states to adopt minimum uniform standards for the licensing and registration of residential mortgage loan originators and to participate in a nationwide mortgage licensing system and registry database of residential mortgage loan originators. Under the SAFE Act, if the Bureau determines that a state's loan origination licensing system does not meet the minimum requirements of the SAFE Act, the Bureau is charged with establishing and implementing a system for all loan originators in that state. Additionally, if at any time the Bureau determines that the nationwide mortgage licensing system and registry is failing to meet the SAFE Act's requirements, the Bureau is charged with establishing and maintaining a licensing and registry database for loan originators. Congratulations! You've just completed a comprehensive journey through bank regulations A to H on our channel, J Get It. We hope this video provided you with valuable insights into the intricate world of financial regulations. If you found this content helpful and informative, please show your support by hitting that like button and subscribing to our channel. By subscribing, you'll stay tuned for future videos where we continue unraveling the mysteries of the financial landscape. Remember, knowledge is key when it comes to managing your money wisely. Thank you for watching, and we look forward to seeing you in our next exciting installment. Thanks for watching.